look at as many of those as we possibly can. So let's just quickly talk about where we are in the market. Ken, what do you think? We're coming down to the 21-day line here on the NASDAQ. Give us your sense of overall market conditions right now.
Well, yeah, and the Qs look like they're just coming down to the 10-day moving average. I mean, listen, this market has proved itself, very resilient. Even when you look at the Qs over the past several trading sessions, you see a lot of closes near highs. Even when the market fell sharply early in the week, it rose, fell and then rose above the 21-day moving average. So today will be interesting. If this is truly a healthy market, maybe we get a nice an early downdraft and then see some buying into the close and a close in the middle or upper half of the range. So so far it just seems like an orderly decline. The news from Amazon was not good. It's a high profile enough stock that's going to move markets, but this is a resilient market, and all the indexes are holding key support levels, and not looking too bad. But it'll be important to see how we finish the day here.
Yes. And Dave, speaking
Hmm.
of Amazon, let's go ahead and go there first. The stock
Sure.
gapping down in reaction to its earnings report. Here you go. It's right here, right by this RS rating. So you can kind of see it there, but gapping down 7% today. So for investors who bought this cup with handle breakout, and maybe they decided to hold into the report, what
Hmm.
would you be doing now?
Well, this is an easy move. You just simply sell, take your lump here, and move on. And maybe months from now, Amazon will set up a new buy point, but a clear break of the 50-day moving average is just exactly just not what you want to see. Now, if you have a much bigger profit cushion, you certainly have earned the right to hold it and see whether it's going to get support at another key level like that 40-week moving average. And yes, Alec, great place to note, like for instance, right out of the end of the coronavirus bear market, what a picture perfect breakout that was, and that held up well. So I guess this time around, it's unfortunate that if you held into earnings, then now you have to play defense. But the silver lining of this is that, well, you've preserved your cash. You have an opportunity to invest in a better name.
Great, thanks. So yeah, if you bought this recent breakout, decided to hold into earnings, you may have actually been slightly down on the position, which we don't recommend doing into earnings. But now, Ed, let's talk about maybe some of the other stocks that this Amazon news might have impacted. So including Shopify, SHOP down 1.7% here, but it's still hanging around this 21-day line.
Yeah, I mean, I was actually surprised to see much movement at all because it reported earnings early this week. So usually the big impact is on companies that haven't reported yet. But, it is down a fair amount this week. That was the thing, heading into earnings, when you add it all up, it's sort of been dripping, but it's a decent loss here. So that's
Yeah,
just an
almost
issue. So
9%.
9%. So if you had a decent gain, maybe heading into earnings, and now that's sort of whittled away if you bought it near that, somewhere in that area. I mean, if you bought it lower down when it maybe what we sort of consider the better buy point, that early entry around 1300, that's still fine. But that was just a little tricky in that front. So, they didn't give a whole lot of guidance about how things would be later in the year. And that's just an issue. I think looking at these things.
Shopify or
Shopify, I don't remember
Amazon?
having Shopify. I remember having a whole lot of guidance, and I may be wrong about that. And so it's just a concern. Look, we know growth is going to slow. There was just no way they could maintain that pandemic level growth, which is fine. It's just sort of trying to balance that out. When is that going to, are we going to see a real slowdown? I don't know. I think Etsy is a bigger concern because we haven't had earnings yet from them. See, we don't know what they're going to do. I mean, presumably they'll have good numbers, but that's just something coming up on that one. That one's I think people are going to want to watch that one.
Yeah, a very aggressive trend line that I believe we set on the show together. So it is coming close to if you bought that aggressive buy point and held all throughout this test of the 200-day line, gapping down again today with earnings early next week. So how would you be positioning yourself heading into Etsy earnings if you owned the stock?
You know what? Maybe I'll defer this one to Ken.
Ken.
Well, yeah, well, I picked up Etsy. It was sort of a unconventional buy for me, but recent shows I said that, yeah, I picked it up right off the 200-day moving average. An unconventional buy, but I was just looking to put a little bit of money to work, and it worked out well. It was up for several days in a row, but certainly this is one where if I don't have a big profit cushion headed into the report, I will most likely be selling and just kind of protecting myself. So I think the big question for investors right now is, especially these companies like Etsy that have benefited so much from the stay-at-home boom last year and saw huge revenue growth as a result. It wouldn't be surprising at all to see Etsy sound a similar tone to what Amazon did, which missed on sales, and their guidance for Q3 wasn't all that great. So we'll probably just manage risk, which is important to do in the market. But hopefully we'll maybe get a little rally. My gain had hit 10% on a short-term trade, but it has shriveled quite a bit. So we'll just have to see where the stock is at next week.
Yes, that makes sense. All right, I'm just going to go on over to the weekly to take a look at my settings, and it looks like I am. I don't want to be on best fit. I want to be on what I'm on right now, right, guys? So, because there's best fit, and then there's standard. So yeah, I was on standard. Okay.
Yeah.
Just
Chris,
making sure.
Actually, people were questioning the Zoom settings,
The
not the chart.
Zoom settings.
Right.
Okay. All right. Well, I did see Tish at best fitter standard, but anyway,
Okay.
yeah. So now we have the standard also set for Zoom. And just to let everyone know, we have inquired with the Zoom team. We want maximum flexibility for the audience to have the screen settings how they so desire. So we are actively working with the Zoom team. For some reason in a software update, they decided to restrict that flexibility. So we are actively working with them to be able to restore that. Okay, now let's move on. Let's stick with this theme here and talk about Pinterest pins, which also had a reversal off of its 200-day line not all too long ago. Dave, this is another one. Do you just take your lumps here?
Yes, I think to be consistent, right, to in the quest to really produce some nice long-term great returns in the future, it's very important just to limit the losses in your leaders, or in limit the losses in your losers. And the issue here too is, I think the stock is so volatile. We did cover this in the IBD 50 stocks to watch feature yesterday, but we weren't saying this is a stock to buy right now. Wait for the earnings to come. If you don't have much of a profit cushion, always consider just reducing that or getting out just ahead of these earnings, because these are such momentous events now. It's nice that you've got support at a round number right now, Allie. 60 seems like a magnet for some buyers, and for good reason. Look at those numbers: 125% sales growth, and that's acceleration from the prior several quarters. And you also still are, to some degree, holding a good degree of the great gains after it broke through, let's say, 40 back last year in